Hi, good morning, everyone. Today, I like to do something which is very different from what I usually do, the currency market. Right? Let's and at the same time introduce this new website of mine, OFA, Order Flow Academy. Now, in this website, of course, we have I've covered the forex, where we have trade set up that post there before trade that taken in trigger, right? So that trader can actually follow. Now today what I'm going to talk about is actually the global stock, right? You can go to the global stock area, and all the concepts uh, taught by the famous investor Warren Buffett, right? And that's his stock for investment, right? Basically, what he's saying is, okay, well, if I'm going to invest in any company, first of all, it has to be a good company, right? So of course, he has his definitions of a good company, right? And also, he mentioned something like, now, if you want to invest in a company, you must be willing to hold on to that company for life. But in our scenario here, we are not talking about holding the company for life, right? So in my program here, basically in this stock global stock trade alert stock pick, I recommend a minimum holding period of a year, right? After 1 year, or in between before 1 year, if the fundamental of the stock changes, and of course I will advise a subscriber to sell the stock, right? So according to Warren Buffett, not only you need to select a good company, you must have a good margin of safety. We call it MOS, margin of safety. Even it's a good company, right? We are not going to buy or invest in a company when the value or share price is too high, right? It doesn't make sense. It's a good company, and we want to invest when the company share price or value is really low, right? And therefore, there will be have a good margin of safety in the event the market go the other way. So what it means by good margin of safety is basically, if the stock is valued at $10, right? Then buy the stock at half the price, $5. Don't buy the stock at $10 or $8 when the value is only $10, right? When the value is $10, don't buy the stock at $15. That's earning, price to book, price to cash flow, price to sales, earning before interest, tax, etc. Right? Enterprise value, right? These are all the ratio that actually Warren Buffett used. Now, so in OFA, right, basically adopt his Warren Buffett idea in investing, right? Company is defined as a company that fulfill all the 9 score that I have mentioned, right? Here you can see that the 9 quality score, right? Based on this 9 score, example, return on assets, cash flow return on assets, right? And then quality earning, leverage, working capital liquidity, right? Change of share issue, change of gross margin, asset turnaround, right? Based on these 9 score, I would then determine whether a company is a good company or average company or a bad company, because I only want to invest in a good company. So I come up with a score that from 1 to 9. After I get taken, when I look at a company, I will implement all these nine variable, right? I get an average, right? So anything that is 8 and 9, a score of 8 and 9 is a good company, right? Sometimes say, how about 7? Well, 7 is borderline. If you can invest, but it is borderline, right? Anything that's below in the range of a score of 1 is 2, those are bad company. Now, would you want to invest in a company which have a score of 3 or 4? Obviously, to me, I won't, right? Because that belongs to the bottom 40%, right? So once I know the company is good company, the next step is I want to know whether the company share price, the value, is it pricing at a very high price, right? Then I use again another metric to calculate whether the company is overpricing or not overpricing. So my concept here is very simple. Three things. First of all, it has to be a good company that fulfill all the 9 criteria, the 9 score, right? Second, it has to be a company that the share price is undervalued, right? Third, The third condition, which is the last condition, which I need to see the company actually has a positive and good earning yield, right? Now it can be low price value, but there's no earning yield. So what's the point of investing, right? That means that my time that to sit on that piece of stock has to be take even longer time before I can see the share price start to move, right? So these are basically the three criteria I look at when investing in stock, right? It's very simple, right? You don't have to pay thousands of dollars just to attend some kind of seminar to teach you how to invest in stock. Of course, you can if you have the money, but and then do you have the time to digest the information, the knowledge that you have just learned during the seminar? The answer is usually no, because most likely you are a businessman or you are working for a paycheck. Now, if you are in the working for a paycheck or businessman, workshop, you'll go back to your routine again. You will rarely have the time to actually internalize the knowledge you learn in the workshop, because that process takes time. Sometimes people who are a bit slow, it could be take up years. And people are basically impatient. We want fast result, right? In my this program, a global trade alert, I do not just pick those stock US, right? I pick those stock is listed in Korea, in Japan, in Singapore, in Malaysia, right, and some European country, as well as down south Australia, New Zealand, China, Hong Kong company undervalue and have a good earning yield return. Then I will recommend this stock to you. So you can see that all you need to do is just a small little fees of 20. You can get access to all the quality stock that you to invest. You don't have to spend thousands of dollars to attend a seminar. You can, if, like I said, you can if you have the money. But then again, do you have the time to digest? Do you have the patience to internalize the knowledge and gain the experience, which most likely you don't have, right? So this is a shortcut. Now let me show you some of the trades that some of the posts I mentioned, right? You can see why I mentioned Tesla is such a bad company to invest. Now if we take the chart there as well, you can see the chart. This is the top, right? It was $340 to $387 in that range. So I say sell the rally, short the Tesla. Why? If you look at the score, quality score, right? The score is actually 2, which belongs to bad company. So why would you want to buy a bad company? Now then we look at the valuations. One in a scale of 1 is to 100. Tesla stands at 67. That's very expensive, right? Well above the average. Earning yield minus 3.72%. Again, do not buy Tesla. So you can see this one, I posted on the August 23. And let's take a look at another one is Tesla. Another one is next week as well, of course. Tesla again, look at this. This was posted 12th of August, right? My bias is still to short Tesla near the high. What you're going to receive? You are going to receive when you subscribe to this global trade stock pick. Now another one I will show you is this Tesla in trouble. Now take a look at this. This was posted on 12th of August, right? Sell the rally. I mentioned this. Sell the rally. You can see that Tesla have dropped from $360 US to a low of 220, and today we can see that it recovered a little bit back to 260. This is today's chart. 260, it dropped to 220, and now back to 250. Right? So why are we selling Tesla? You can read all this on your own. Now again, come back to my 3 criteria. Look at Tesla here. What's the quality score? Again, they stand at 2. There's no improvement at all, right? A good company should have a score of 8 or 9, right? A bad company is 2, 1 and 2. So Tesla, look at the valuation. 1 is to 100. Tesla has a 67. Again, this company is overvalued. Now look at the earning yield. Negative $3.72. You wouldn't want to invest in such a company, right? So you can see that, and then you want to short this company, all right? Now let's go on the September 9. Again, I post a few companies for comparison. Look at Tesla, 264. Definitely this is a no-no. Netflix, look at Netflix. The total score is 4. Again, not as bad as Tesla, but again, is a company that you don't want to buy, right? Because it's below the mark, underwater 4. Now look at the valuation of Netflix. 60% is almost on par with Tesla, right? Earning yield 0.85%. Okay, at least they are making some money. Tesla totally lose money, right? Another company is Sowa Corporations. Look at their score, 8. 8 is a good company, right? Look at the valuation, 5. A good company where the company is undervalued, right? Look at the earning yield, 20.14%. This is a company that you want to look at, invest, especially when the price start to move lower to the company, right? Another Japanese company. Look at the score, 6. Well, it's average, so maybe this borderline, forget about it, right? Don't even bother, right? Even though the value is very low, the company is undervalued, but it's not a good company, right? It's still an average company. So we are not interested to invest in an average company. Now the earning yield is 10.12. Again, we are not interested. Why? Because it is an average company. Look at Amazon, the score of 8. The valuation, 54. Very, very expensive, right? And the earning yield is 0.76%. So you can see that the concept that I share here is very simple and is proven by the famous investor, right? The value investing, right? Thank you very much, and see you next time.